a weekly look at oilseed rates, a new video update. I normally put it in with the wheat, but I'm doing one separately because we're looking at long-term structure. Today is 28th of November 9:04, so it's pre-market open, and we've got the rapeseed futures contract, continuous monthly contract in front of us. And I've put an edit wave count here on the monthly contract. You can see here we've had falling prices during 2012, all of 13, had a small rise beginning of 14, and then we've had this big fall back here. We closed last night at 338.75. We've got this downward sloping channel. We are in a downwards trend at the moment that has been in place for 3 years. We had a big green candle in October, and we are getting a November candle here, red at the present moment. This is coming back to test the 5 monthly moving average here. Looking across the left of the chart here, we've got a high here set in 2009 of 336. That seems to be the line in the sand. The market broke down through it, failed, and shot back up above it. And we're now dead on that line at the moment, close 338, 336. We could continue this rally if we get above this monthly high in October and go back up to test 360, but I feel that we've still got further downside potential sort of down here, question mark, wave 3 down at 280, 300 mark at the present moment, which would take us down to test the lows of 2010. As always, we'll then pop down into the lower time frame, look at the weekly one, and here we have this same channel here on the weekly. This is when we started to fall in 2012. We took out the lows of 2012 here, 440, big red candle here. It seems to be quite significant when we get across the moving average. This is a 5 weekly average over 20 moving average. We had one here, and you can see then the market fell 480, 90, nearly 100 points down. We then had this rise up here beginning of 2014, hit a high here 420, which I put in my count of wave 4. So we had this wave 3 impulse wave here. If you go on the count here, we could be having a short wave 5 here that would take us down to this low of 320. I've got marked on here this low, this high here of the 2010, the 336 level. So we're sort of stuck between a bracket at the moment. We need to clear this 349, 350 level here, which is the last swing low of so it's the sort of where we started 2014. And at the moment we're not able to break above it, and we've tried and failed, and we've also tried the downside and failed. If this breaks, we could quickly see 320, 300, and that would follow in nicely with this channel at the moment, and that would be sort of a blip as we saw back up here at the end of 2013. So let's pop down into the daily chart, and you see on the daily chart here I've got 5, 20 and 60. I've got our old friend 60-day moving average on the daily, and you can see how important that's been. We had this break up through here in October, which I was getting excited about. We came back and tested it here and held. We then had this big move up here to test 350, hit our head against the upside resistance here, this swing here. We can see here we had the low of, it was the low of January of last year. Let's try and get some, where are we at the present moment? Can we get the momentum to break to the upside? Well, let's go down and have a look at the 5 and 20 moving average. We had a cross up here, which gave us the move, come back, tested, up, yep, good. We then had a sell signal here, the moving average crossed down. That was failed quickly, and we reverted back to getting upward crossing signal again here at the moment. So we've had 2 crosses within the sort of nice space of 2 weeks. So that's sort of showing me a sort of sign of sideways momentum. So then if you put a wave count on it, we've got 1, 2, 3, 4. So we're in a wave 4 pattern, which would give us this, why we're getting this sort of multi-cross of moving averages. sort of consolidation. Could see another test of the 6-day moving average 335. That could be on the cards actually today, tomorrow, when sort of Monday, Tuesday, Wednesday. If this doesn't hold this 60-day moving average and we get 2 daily closes below it, it's at this 335 level, so that breaks our 336, which if you went back to the monthly chart is that important level from 2011, then I think we've got another wave down on the weekly chart, which was takes down to the 300-228. So it is on a knife edge at the present moment. Unfortunately, there's no sort of magic signal I can give you to preempt this breakout of this trading range at the moment. If we hold this 6-day moving average, we could see a quick move up to 365, and it would take through this low here. Then it would give us a close above October's green candle. So the crucial week for the rate market is next week. If it closes at this level, sort of 338, 335, then we didn't take out the highs of October, and I would see the potential for a further move downwards. If we hold this pattern and we could just close above the 350 mark, then we've got something sustained. We could see a rally up to the 365. So I'm sort of going to hold my hat on the moving average cross and obviously the whole of the 6-day moving average, and I'll put an update this time next week. Thanks for watching.